Is Jackson Hole going to be a big market-moving event?
Well, if you're in Singapore like I am, it's not going to be until 10 p.m, so you've got to be excited if you're going to be staying up to watch it. I think that Jerome Powell, on the other hand, will probably try to be as gentle as he can in terms of the impact that he's going to have on the market. Probably, from everything that we've heard from the other Fed speakers, the message is going to be that the Fed will be starting soon with the cuts, but it's only going to be going gradually. We're not going to get that swift, sharp move that maybe some have been pricing in until quite recently. So, what will that do for market pricing? It could still stoke some volatility. We saw it a bit yesterday in US markets. We heard from the likes of Mohamed El-Arian saying the pace of cuts that's priced into the market is too great. And you could probably see that. If you think that the Fed is only going to do 25 basis points per meeting, then the market is already pricing 100 for this year, which is too much. So we could still see some of that come out of the short end of the bonds market, and that may in turn lend a little bit of support to the dollar as well. But probably if that's mixed with a kind of message of gradual cuts for some time, then that can assuage equity investors and keep everything else pretty much intact.
Paul, dollar weakness has been quite the theme over the last, well, I want to say couple of days. The fact that we're looking at a 131 handle on cable to me is surprising this morning. 111 on euro dollar. How long does that last?
I think if the Fed is going to be on a prolonged cutting cycle from here, then probably the dollar does start to lose some of the support that it has had over the past few years, right? And so in that case, you could see, all things being equal, continuing pressure on the dollar, and depending on the pace of cuts in other markets and the strengths of their economies, maybe some relative strength coming through still from the pound, the euro. And if you look over here in Asia, the Asian currencies have been on a real tear against the dollar for the last 6 or 8 weeks, still really enjoying those gains. And it feels like they have momentum behind them too. So some of that, those flows coming out of the US may be moving into higher yielding emerging markets, people thinking that that could be the next place to park their money.
What did you make of Ueda's comments? I felt he was hawkish, not that hawkish, a little bit cautious. I understand, given the politics in Japan, I understand that Jackson Hole is coming around pretty quickly as well. What did you make of what he had to say, and what clue should we take from it?
Yeah, I think that having pulled off a rate hike, and, managed to reduce the bond buying as well in the last BOJ meeting, he doesn't want to step back right now. He wants to show that the BOJ is still committed to raising interest rates, again, going gradually like the Fed, not going aggressively. I think that's the message that he wanted to get across to markets and was quite successful. And secretly, I think that he's probably quite happy with what happened in the, maybe not the extreme volatility that happened immediately after the BOJ's last meeting, but in the in the longer term, he's blown some froth off the equities market and out of the yen carry trade, and everything is returning to normal again.